What's going on, everyone? Welcome back to another live stream. We have the Jackson Hole event. We have Jerome Powell speaking live, which is going to be very big for markets. Markets have already priced in a hawkish Jerome Powell speech, and they've already priced in negativity. Okay, so it's going to be interesting to see what happens. We're going to stream it live on the channel. So smash the likes as you're tuning in. I'm going to discuss everything that's going on in the markets. I'm going to discuss Bitcoin. I'm going to discuss Ethereum. We're going to look at some of the altcoin charts as well. And most importantly, we're going to listen to what Jerome Powell has to say, and I'll be discussing the ramifications of it. So smash up the likes, get your comments in, get your questions in. Make sure to also answer the poll that I put in the chat. Do you think we're going to pump as a result of this speech, or do you think we're going to dump as a result of this speech? We're scheduled to have the speech in just over 20 minutes. So stay tuned for that. And in the meantime, I'll be answering your questions. We'll be looking at some charts, and we'll be going over all the important information. So stay tuned. So in terms of the market, we have Bitcoin currently testing major support. The support level, which I mentioned on the previous live stream. All right. And that is the previous all-time high from May of 111.8K, 0.9K roughly. Okay. That is the level which we must hold. If we don't hold this level, if we close below it on a daily candle or on a weekly candle, I'm expecting Bitcoin to go straight down to 109K. It would be almost inevitable that we'd come down to 109K. And you can see right now, you know, we actually wicked down below that support. It was an hour ago or so. We wicked down below that key support level, below that 111.9K. We wicked down to 111.6. So looking at the chart, we're pretty oversold on the 4-hour. We're pretty oversold kind of on the daily, but the daily looks like we could come down a little bit more. I think it is possible that we come down to 109. Okay, my base case assumption was that we don't go to 109, that we hold 111, but we are seeing a bit of weakness here. There's a bit of infighting going on between the bulls and the bears with Bitcoin, and obviously time will tell. We're going to find out anyway in 20 minutes when Jerome Powell comes on and speaks. But either way, we're going to get a decision. We're going to get a move. And 109K is that major level that people are talking about. I think it is possible we come down to that level in the next couple of days. If we are going to come down to that level, it's probably going to be now more than ever, right? It's going to be pretty imminent. It's not going to take long. And then I do expect the liquidity to come in and for us to get a sizable bounce from that level. Okay, so this is what I'm watching. We're going to keep a close eye on the Bitcoin chart. Going to keep a close eye on that 111.9K, whether we lose it again, because more likely than not, if we do lose it, we're going to come down to 109. So get your questions in. I'm going to go through some of the comments, see what you guys are saying. Tom Lee said that the market's bottomed ahead of Jackson Hole. I see us pumping after the conference. Possible. It's very possible. I mean, that's my assumption. The markets have already priced in a hawkish Jerome Powell speech. They've already priced in Powell essentially just echoing on about inflation and how bad the PPI was. Right? They've already decided that that's what's going to happen. So if he comes out and does that, it's not going to be a huge shock. Everyone expects Powell to come out and say PPI was worrying. Everyone expects him to come out and say the effects of tariffs are lagging. We still haven't seen the full effects, blah, 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 right? Everyone's expecting that. We need a little button that we can press. Every time he mentions inflation and CPI, we need a little button to press, you know, to like ding so everyone can hear, because everyone just knows that's what he's going to do. Because Powell sides on the inflation side, right? There's a dual mandate the Fed have, inflation and unemployment. He sides on the inflation side. He wants to keep inflation down. We just had bad jobs figures, 2 back-to-back jobs labor market figures, right? One a few weeks ago, one just literally, was it yesterday? I start to lose my sense of time a little bit because of all the jet lag. I came from the US to Dubai. There's like a freaking 12-hour time difference or something. So sometimes I lose a sense of time, but either way, Jerome Powell will side on the inflation side of the argument, and everyone expects that. The question is, even if he's hawkish, can we still get just one cut in September? That's all we're asking for. 25 basis point kind of rebalancing cut. Not necessarily the start of a cutting phase or cutting season, but just a little rebalance, to bring things back to how they should be, a bit more liquidity. So that is the question that everyone's going to be asking. And as I said, we're going to find out very shortly. As of right now, the odds for a rate cut in September are currently sat around 63%, right? You can see that there's a 2% chance of a 50 basis point cut, and there's a 61% chance of a 25 basis point cut. So more likely than not, we get a cut in September, but it's going to be interesting to see the odds change whilst we're streaming this Jackson Hole speech from Powell coming up very shortly. As of right now, there's a 35% chance that there is no change. 35% chance. Archie, I think you are missing one of the top base gems in Moonwell. Yeah, Moonwell's solid. I just prefer Morpho because it's directly integrated within Coinbase. I'm also not very bullish on Moonbeam, Moonriver, and that whole Polkadot parachain ecosystem. So that's why I'm not a massive fan of Moonwell, but it is a solid project. I think it will do well. Jackson Hole in 2023 and 2024 signaled the bottom. Well, it's a mixed bag. Sometimes the Jackson Hole can signal a bottom. Sometimes it actually can lead to a dump. So it's a mixed bag. But it certainly brings volatility. And that's why, if you're a good trader, you can make a lot of money in these times. Now, I'm not necessarily saying you should go and trade leading into an event because that's a very risky endeavor. But if you know what you're doing, you can make a lot of money. All right. Last night, I opened up a long. I made 60% returns. When I was up 60%, I took out my initial, and then the rest got stopped out down here, right? So overall, I made a bit of profit. Nothing crazy, but I made some profits, to add to my spot bags. So yeah, what I'm going to say is, if you do want to trade, if you do want to use leverage to long or short, strongly recommend using that link down below. Getting on Blowfin, that's the best exchange. And I'm going to be doing a lot of live classes actually in the VIP group on trading, because it's going to be very important, especially as we go into uncertain times, to be able to get into shorter term positions and not be indebted to a long-term spot position, especially if a bear market looks like it might be looming, right? You don't want to be tied up to spot positions where you feel like you have to hold them long term. Instead, you can get into a trade where you've got a stop loss and you've got more of kind of a short-term plan. You don't want to be buying blind into spot when we get into the apex to the end of the bull run, right? So let's see what you guys are saying in the chat about the poll. I'm very curious to see whether you think we're going to pump or dump. Let's see. Guys, 30 likes on the stream, 178 watching. Let's try and get those likes up a ton. I'd appreciate that. Yeah, I mostly care about alt charts. Amazing charts. Yeah, I'm looking at the charts with good setups. Altcoins currently have better setups than Bitcoin. Altcoins look better than Bitcoin currently. Like Ethereum's chart looks pretty solid. I'm not gonna lie. Like I was looking at it on the 4-hour. It looks good. Ethereum looks good on the 4-hour, guys. Like you can say what you want, but like look at that chart. Clear resistance and a clear break. So I think we're in that stage of the bull run, you know, kind of like what happened in 2017, where Bitcoin's on its last legs. There's really not long left of Bitcoin's bull run. But altcoins are just about to go into insanity mode. And I think if we get a cut in September, or Powell indicates in this speech of a cut in September, then markets are going to front run that. We're going to go back risk on, and we're going to start pumping again. And if you follow the stock market, the Russell 2000 has actually been doing decent in comparison to some of the other main indexes that people look at. So the Russell 2000 is a good, you know, indicator of risk on in the stock market, just like Ethereum is a good indicator of risk on in the crypto market. So I'm pretty confident that Ethereum could break out here while Bitcoin remains relatively stagnant. We've seen already Ethereum make a large move while Bitcoin had stagnation. So it's very possible we have that again, where Bitcoin just kind of hovers between 109, 109 and 123, just kind of hovering in that range while the alts are doing a madness. It's very, very possible we get that type of outcome. Everyone thinks there's a guarantee that you need Bitcoin and altcoins moving together, but you know, we've seen recently that that doesn't have to be the case. So I think we are seeing a little bit of a decoupling between Ethereum and some of the altcoins. A little bit of a decoupling, and we're seeing dominance definitely fall off. I'm targeting dominance here. I mean, it keeps trying to hit this level, but it's not gaining much momentum, you know? So I'm expecting a fall down on dominance below this support that it keeps trying to retest around 59%. You can see right on the 4-hour, dominance just keeps coming down, testing this level, then getting a little bounce up to 60, then coming down, then getting a little bounce up to 60, then coming down. It looks like it wants to fall off, dominance, for that final, you know, risk on move of the bull run where all that money's made. And it was interesting. I was looking back at some of the charts yesterday from 2017. Almost all of the top altcoins topped out after Bitcoin in 2017. 2021 was a bit different. Most of them topped out before. But it does show you can have a situation where alts top out, you know, after Bitcoin. Ben Shaw, appreciate the $2 Canadian, says Q3 end of September plus September is normally red, Q4 green. Look, I'm not a big proponent of seasonality in crypto. I'm really not. Like everyone thinks seasonality is everything. Sell in May, go away. That didn't work out well, did it? If you sold in May and ran away, you were an idiot this bull run. You're an absolute idiot. Right, we were making crazy gains in May. I was waking up, seeing my portfolio skyrocket in May. And all the sell in May, go away idiots, they sold in May because of seasonality, because of the seasonality argument. So honestly, I'm really not a big proponent of seasonality, especially with crypto. I mean, we can see huge deviations from seasonality in crypto. It's very possible that September's bullish. Everyone's like selling September because September's usually red. It's very possible September's bullish. And plus, there's a very strong trend actually, where if August is red, typically September is green. That's usually the way it plays out. But anyway, let's look at the poll. So it's 50-50. It's a complete split. Half of you guys think we pump. Half of you guys think we dump. Arrow, Beam, Naka, Mavia all look pretty good, yeah. Is this bull run similar to 2017? It's not similar to either bull run, to be honest with you. It's hugely decoupled from the cyclical norm, especially the altcoin side of things, Ethereum and the altcoins. Ethereum should probably be around $7,000 right now if it was following a typical cycle, right? And it'd be topping out shortly, be topping out in a few weeks. So the typical cycles, in the past, especially with alts. I mean, Bitcoin, maybe not so much, but with alts, yeah, 100%. So we're going to be assessing the rates of rate cuts, the probability of rate cuts whilst Powell is speaking. We're going to be having a look at that, seeing if it changes at all. Let me see if we have the YouTube up here. So let me just see how long we have. So 9 minutes we're expecting Powell to speak, right? Expecting Powell to come on in 9 minutes, 10 a.m. Eastern time. Right, yeah, 9 minutes. 6 p.m. Dubai time, 10 a.m. Eastern time. We're expecting Powell to come out and deliver a kind of 15 to 30 minute speech. So we'll be watching it live. I know you guys can hear no volume currently, but once I turn it on for real, please let me know in the chat if we have volume, because we don't want to be in a situation with no volume. But we'll have it on and it'll all be good. People are fussing a little bit about Casper. Casper just remains in the same position it's been in for a while. It's still in a downtrend officially until it breaks above the downward slope in resistance. It is still in a downtrend. Okay, don't know how many times I have to say that to people. Casper is still in a downtrend. Once it breaks, then I'm targeting 30 cents. It's really that simple. Fundamentally, it looks really strong. Got smart contracts coming out in a few days. Community is really strong. It just needs a bit of a break when it comes to the chart, right? It needs a bit of a breakout. It's currently in a golden pocket, essentially. So a lot of things with Casper look okay. We just need that break above 10 cents, really. A break above 10 cents would confirm an upward move and would invalidate the downtrend it's been in. Taking a look at Bitcoin here, we're getting a little bit of a bounce. 112.5 currently. A little bit of a bounce off that massive support level that we came down to and hit. And you know what this was, right? This was essentially to get rid of the stop losses. This was basically a wick to get rid of the stop losses. So it is possible we bounce here. Yeah, I'm honestly going to say it's basically 50-50. I know I said at the start of the stream that I favor 109K. It's like 49-51. 51% chance of going down to 109K, 49% chance that this is the floor. This is the bottom. So it's really basically 50-50. Maybe I have a slight edge to 109, but honestly, I think there's a very, very solid chance this is the bottom here. We've come down to a key level and we've got a bit of a bounce. It really just depends how the whales, how the market makers interpret Powell's speech. If they see it as bearish, then they're gonna dump us, you know? It's not always up to us. You know, a lot of the time in investing and trading, it's not about your opinion. It's about the market's broad opinion, and it's about your ability to judge that. You can feel bullish, right? But if the market doesn't feel bullish, we're gonna go down. It's not about what you think. It's about how the market perceives it. Quite often, Powell has spoke, and I've perceived it as bullish, but the market's perceived it as the other way. But it's your ability to judge the market which makes you a good investor, right? Stock market's been okay. I mean, it's not done anything special today. I think the S&P was up about 20 basis points. Russell 2000 was up today as well, so it was doing okay. Best memes are on Sol, that's for sure. Yeah, Aerodrome's been a great play for us. Yeah, have you been watching this channel? Have you been a VIP member especially? You're a big on Aerodrome. Anyway, we're expecting Powell to speak in 4 minutes. So I'm just going to test out the audio. If you guys could let me know if the audio is all good, that would be great. Let me just take this off and then do this. Okay, please.
Yeah.
Can you guys hear the audio? Let me know in the chat.
I was in there, yeah.
Exactly, of course. He actually listens too. I am wondering, though, what the risk reward here is, and just to sort of crystallize the moment, what the harm would be of cutting by 25 or 50 basis points. And you talked about how you penciled that in. It wouldn't be that big of a deal. Are we just making these big, grand pronouncements about the same thing, that essentially it might make sense to cut on the margins, but not necessarily go wholesale to 1%? I mean, is that essentially what everyone seems to be coalescing around?
I don't see how you would go 1%, right? I mean, that's just simply not in the cards. 25 basis points, what matters is not the number, but the signal it sends, right? Because what the Fed is, because is 25 basis points going to move the 10-year? No, not really. The market's going to move the 10-year. It's more the signal of where the Fed thinks the economy is, right, and where it's going. That's why.
Audio good? All right.
Like the idea of pausing.
Yeah, so we're good to go. We're good to go in 3 minutes, guys. Let's just take a quick look, see what's going on right now with Bitcoin. Let's check Blowfin. Link down below if you want to sign up and get some free money, free bonus. So, yeah, seeing a little bit of red here, 112.3. Support is at 111.8, and we had the wick down to 111.6. So those are your levels to watch. Say has been dropping more than the alts on average. Not really. More than the other alts, like more than Arrow and more than some of the other alts I hold, but not more than the overall market. Yeah, get on the VIP, guys, if you want to see my new buy alerts. And there's going to be some voice chats coming up probably later today. So stay tuned for that if you want to speak to me on a voice chat. Really, really informative group calls they are. It looks like a beautiful place, Jackson Hole. Looks like a really nice place, very scenic. Nice mountains in the background. So the S&P is up 0.4%, Nasdaq's up 0.1%. So the tech, stocks aren't doing as good right now. Bitcoin's at 112.3. Let's take a quick checkup on Ethereum. Ethereum's at 4.2K. Hovering around resistance right now, Ethereum is. I think we could pump, guys. I really do. I think we could see a situation where maybe the market overreacted a little bit. They priced in Powell being a little bit too bearish. I think it's possible that we get a nice little rally. But we'll have to wait and see. It could go either way. So if you're in trades right now, just be careful. Make sure you got your stop losses and all of that, because these times can be very, very volatile. S&P up 0.7% now, getting a little bit of a bounce. 0.9. That's a decent move in a few seconds, right? Did it just move like 0.4% in a few seconds? That's a pretty big move for the S&P. If you think about the amount of money that it requires to bring in there. ETH moving up. Wow. We're getting a pump, guys. We're getting a big pump here on ETH, breaking out on the daily and the 4-hour. Breaking out, guys, on ETH. Once Powell starts speaking, I'm going to bring it to you guys, so don't worry. Once Powell starts speaking, it will be on the screen, guys. Don't worry about it. So, wow, look at this God candle. God candle on Bitcoin to the upside. God candle on Bitcoin. God candle on Bitcoin. On the 15-minute. Long ETH, it's tempting. I mean, we'll see what Powell says, but it's tempting. It's tempting. S&P just moved like 0.7% in like a minute. That's crazy. I mean, this move here, right? Really what that move is like them trying to get out the stop losses. I mean, I got stopped out on one of my trades there. One of the trades I was in got stopped out exactly that, because that's what they do. They come for your stop losses. And now they're pumping us. And I actually said in the voice chat today that I felt like the market's already priced in a hawkish speech. So if he comes out hawkish, I mean, that was the expectation. So if he comes out somewhat dovish, then we're going to pump. All right, Powell's speaking.
Well, right now, let's take a listen to
Just confirm in the chat. Can you hear the
Reserve.
volume? Just confirm.
In my remarks today, I will first address the current economic situation and the near-term outlook for monetary policy. I will then turn to the results of our second public review of our monetary policy framework as captured in the revised Statement on Longer-Run Goals and Monetary Policy Strategy that we released today. When I appeared at this podium 1 year ago, the economy was at an inflection point. Our policy rate had stood at 5.25% to 5.5% for more than a year. That restrictive policy stance was appropriate to help bring down inflation and to foster a sustainable balance between aggregate demand and supply. Inflation had moved much closer to our objective, and the labor market had cooled from its formerly overheated state. Upside risks to inflation had diminished, but the unemployment rate had increased by almost a full percentage point, a development that historically has not occurred outside of recessions. Over the subsequent 3 Federal Open Market Committee meetings, we recalibrated our policy stance, setting the stage for the labor market to remain in balance near maximum employment over the past year. This year, the economy has faced new challenges. Significantly higher tariffs across our trading partners are remaking the global trading system. Tighter immigration policy has led to an abrupt slowdown in labor force growth. Over the longer run, changes in tax, spending, and regulatory policies may also have important implications for economic growth and productivity.
114.2.
There is significant uncertainty about where all of these policies will eventually settle and what their lasting effects on the economy will be. Changes in trade and immigration policies are affecting both demand and supply. In this environment, distinguishing cyclical developments from trend or structural developments is difficult. This distinction is critical because monetary policy can work to stabilize cyclical fluctuations, but can do little to alter structural changes. The labor market is a case in point. The July employment report, released earlier this month, showed that payroll job growth slowed to an average pace of only 35,000 per month over the past 3 months, down from 168,000 per month during 2024. This slowdown is much larger than assessed just a month ago, as the earlier figures for May and June were revised down substantially. But it does not appear that the slowdown in job growth has opened up a large margin of slack in the labor market, an outcome we want to avoid. The unemployment rate, while edging up in July, stands at a historically low level of 4.2% and has been broadly stable over the past year. Other indicators of labor market conditions are also little changed or have softened only modestly, including quits, layoffs, the ratio of vacancies to unemployment, and nominal wage growth. Labor supply has softened in line with demand, sharply lowering the break-even rate of job creation needed to hold the unemployment rate constant. Indeed, labor force growth has slowed considerably this year with the sharp fall-off in immigration, and the labor force participation rate has edged down in recent months. Overall, while the labor market appears to be in balance, it is a curious kind of balance that results from a marked slowing in both the supply of and demand for workers. This unusual situation suggests that downside risks to employment are rising. And if those risks materialize, they can do so quickly in the form of sharply higher layoffs and rising unemployment. At the same time, GDP growth has slowed notably in the first half of this year to a pace of 1.2%, roughly half the 2.5% pace in 2024. The decline in growth has largely reflected a slowdown in consumer spending. As with the labor market, some of the slowing in GDP likely reflects slower growth of supply or potential output. Turning to inflation, higher tariffs have begun to push up prices in some categories of goods. Estimates based on the latest available data indicate that total PCE prices rose 2.6% over the 12 months ending in July. Excluding the volatile food and energy categories, core PCE prices rose 2.9%, above their level of a year ago. Within core, prices of goods increased 1.1% over the past 12 months, a notable shift from the modest decline seen over the course of 2024.
Odds of a rate cut now coming in
at 85%. Housing services inflation remains on a downward trend, and non-housing services inflation is still running at a level a bit above what has been historically consistent with a 2% inflation. The effects of tariffs on consumer prices are now clearly visible. We expect those effects to accumulate over coming months with high uncertainty about both timing and amounts. The question that matters for monetary policy is whether these price increases are likely to materially raise the risk of an ongoing inflation problem. A reasonable base case is that the effects will be relatively short-lived, a one-time shift in the price level. Of course, one time does not mean all at once. It will continue to take time for tariff increases to work their way through supply chains and distribution networks. Moreover, tariff rates continue to evolve, potentially prolonging the adjustment process. It's also possible, however, that the upward pressure on prices from tariffs could spur a more lasting inflation dynamic, and that is a risk to be assessed and managed. One possibility is that workers who see their real incomes decline because of higher prices demand and get higher wages from employers, setting off adverse wage price dynamics. Given that the labor market is not particularly tight and faces increasing downside risks, that outcome does not seem likely. Another possibility is that inflation expectations could move up, dragging actual inflation with them. Inflation has been above our target for more than 4 years and remains a prominent concern for households and businesses. Measures of longer-term inflation expectations, however, as reflected in market and survey-based measures, appear to remain well anchored and consistent with our longer-run inflation objective of 2%. Of course, we cannot take the stability of inflation expectations for granted. Come what may, we will not allow a one-time increase in the price level to become an ongoing inflation problem. So, putting the pieces together, what are the implications for monetary policy? In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. Our policy rate is now 100 basis points closer to neutral than it was a year ago, and the stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. Monetary policy is not on a preset course. FOMC members will make these decisions based solely on their assessment of the data and its implications for the economic outlook and the balance of risks. We will never deviate from that approach. So, turning then to my second topic. Our monetary policy framework is built on the unchanging foundation of our mandate from Congress to foster maximum employment and stable prices for the American people. We remain fully committed to fulfilling our statutory mandate, and the revisions to our framework will support that mission across a broad range of economic conditions. Our revised statement on longer-run goals and monetary policy strategy, which we refer to as our consensus statement to save time, describes how we pursue our dual mandate goals. It is designed to give the public a clear sense of how we think about monetary policy, and that understanding is important both for transparency and accountability, and for making monetary policy more effective. The changes we made in this review are a natural progression grounded in our ever-evolving understanding of our economy. We continue to build upon the initial consensus statement adopted in 2012 under Chairman Ben Bernanke's leadership. Today's revised statement is the outcome of the second public review of our framework, which we conduct at 5-year intervals. This year's review included 3 elements: Fed Listens events at reserve banks around the country, a flagship research conference, and policymaker discussions and deliberations supported by staff analysis at a series of FOMC meetings. In approaching this year's review, a key objective has been to make sure that our framework is suitable across a broad range of economic conditions. At the same time, the framework needs to evolve with changes in the structure of the economy and our understanding of those changes. The Great Depression presented different challenges from those of the Great Inflation and the Great Moderation, which in turn are different from the ones we face today. At the time of the last review, we were living in a new normal, characterized by the proximity of interest rates to the effective lower bound, or ELB, along with low growth, low inflation, and a very flat Phillips curve, meaning that inflation was not very responsive to slack in the economy. To me, a statistic that captures that era is that our policy rate was stuck at the ELB for 7 long years following the onset of the global financial crisis in late 2008. Many here will recall the sluggish growth and painfully slow recovery of that era. It appeared highly likely that if the economy experienced even a mild downturn, our policy rate would be back at the ELB very quickly, probably for another extended period. Inflation and inflation expectations could then decline in a weak economy, raising real interest rates as nominal rates were pinned near zero. Higher real rates would further weigh on job growth and reinforce the downward pressure on inflation and inflation expectations, triggering an adverse dynamic. The economic conditions that brought the policy rate to the ELB and drove the 2020 framework changes were thought to be rooted in slow-moving global factors that would persist for an extended period. And they might well have done so, if not for the pandemic. The 2020 consensus statement included several features that addressed the ELB-related risks that had become increasingly prominent over the preceding 2 decades. We emphasized the importance of anchored inflation, longer-term inflation expectations to support both our price stability and maximum employment goals. Drawing on an extensive literature on strategies to mitigate risks associated with the ELB, we adopted flexible average inflation targeting, a make-up strategy to ensure that inflation expectations would remain well anchored, even with the ELB constraint. In particular, we said that following periods when inflation had been running persistently above 2%, appropriate monetary policy would likely aim to achieve inflation moderately above 2% for some time. In the event, rather than low inflation in the ELB, the post-pandemic reopening brought the highest inflation in 40 years to economies around the world. Like most other central banks and private sector analysts, through year-end 2021, we thought that inflation would subside fairly quickly without a sharp tightening in our policy stance, as this slide will show. When it became clear this was not the case, we responded forcefully, raising our policy rate by 5.25 percentage points over 16 months. That action, combined with the unwinding of pandemic supply disruptions, contributed to inflation moving much closer to our target without the painful rise in unemployment that has accompanied previous efforts to counter high inflation. This year's review considered how economic conditions have evolved over the past 5 years. During this period, we saw that the inflation situation can change rapidly in the face of large shocks. In addition, interest rates are now substantially higher than was the case during the era between the global financial crisis and the pandemic. With inflation above target, our policy rate is restrictive, modestly so in my view. We cannot say for certain where rates will settle out over the longer run, but their neutral rate may now be higher than during the 2010s, reflecting changes in productivity, demographics, fiscal policy, and other factors that affect the balance between saving and investment. During the review, we discussed how the 2020 statement's focus on the ELB may have complicated communications about our response to high inflation. We concluded that the emphasis on an overly specific set of economic conditions may have led to some confusion, and as a result, we made several important changes to the consensus statement to reflect that insight. First, we removed language indicating that the ELB was a defining feature of the economic landscape. Instead, we noted that our monetary policy strategy is designed to promote maximum employment and stable prices across a broad range of economic conditions. The difficulty of operating near the ELB remains a potential concern, but it is not our primary focus. The revised statement reiterates that the committee is prepared to use its full range of tools to achieve its maximum employment and price stability goals, particularly if the federal funds rate is constrained by the ELB. Second, we returned to a framework of flexible inflation targeting and eliminated the makeup strategy. As it turned out, the idea of an intentional moderate inflation overshoot had proved irrelevant. There was nothing intentional or moderate about the inflation that arrived a few months after we announced our 2020 changes to the consensus statement, as I acknowledged publicly in 2021. Well-anchored inflation expectations were critical to our success in bringing down inflation without a sharp increase in unemployment. Anchored expectations promote the return of inflation to target when adverse shocks drive inflation higher and limit the risk of deflation when the economy weakens. Further, they allow monetary policy to support maximum employment in economic downturns without compromising price stability. Our revised statement emphasizes our commitment to act forcefully to ensure that longer-term inflation expectations remain well anchored to the benefit of both sides of our dual mandate. It also notes that price stability is essential for a sound and stable economy and supports the well-being of all Americans. This theme came through loud and clear at our Fed Listens events. The past 5 years have been a painful reminder of the hardship that high inflation imposes, especially on those least able to meet the higher costs of necessities. Third, our 2020 statement said that we would mitigate shortfalls rather than deviations from maximum employment. The use of shortfalls reflected the insight that our real-time assessments of the natural rate of unemployment, and hence of maximum employment, are highly uncertain. The later years of the post-global financial crisis recovery featured employment running for an extended period above mainstream estimates of its sustainable level, along with inflation running persistently below our 2% target. In the absence of inflationary pressures, it might not be necessary to tighten policy based solely on uncertain real-time estimates of the natural rate of unemployment. We still have
7%
but
in the
our
last
use of the
hour
term shortfalls was not always interpreted
week.
as intended, raising communications challenges. In particular, the use of shortfalls was not intended as a commitment to permanently forswear preemption or to ignore labor market tightness. Accordingly, we removed shortfalls from our statement. Instead, the revised document now states more precisely that the committee recognizes that employment may run at times above real-time assessments of maximum employment without necessarily creating risks to price stability. Of course, preemptive action would likely be warranted if tightness in the labor market or other factors pose risks to price stability. The revised statement also notes that maximum employment is the highest level of employment that can be achieved on a sustained basis in a context of price stability. This focus on promoting a strong labor market underscores the principle that durably achieving maximum employment fosters broad-based economic opportunities and benefits for all Americans. The feedback we received at Fed Listens events reinforced the value of a strong labor market for American households, employers, and communities. Fourth, consistent with the removal of shortfalls, we made changes to clarify our approach in periods where our employment and inflation objectives are not complementary. In those circumstances, we will follow a balanced approach in promoting them. The revised statement now more closely aligns with the original 2012 language. We take into account the extent of departures from our goals and the potentially different time horizons over which each is projected to return to a level consistent with our dual mandate. These principles guide our policy decisions today, as they did in the 2022 to 24 period, when the departure from our 2% inflation target was the overriding concern. In addition to these changes, there is a great deal of continuity with past statements. The document continues to explain how we interpret the mandate Congress has given us and describes the policy framework that we believe will best promote maximum employment and price stability. We continue to believe that monetary policy must be forward-looking and consider the lags in its effects on the economy. For this reason, our policy actions depend on the economic outlook and the balance of risks to that outlook. We continue to believe that setting a numerical goal for employment is unwise because the maximum level of employment is not directly measurable and changes over time for reasons unrelated to monetary policy. We also continue to view a longer-run inflation rate of 2% as most consistent with our dual mandate goals. We believe that our commitment to this target is a key factor helping keep longer-term inflation expectations well anchored. Experience has shown that 2% inflation is low enough to ensure that inflation is not a concern in household and business decision-making, while also providing a central bank with some policy flexibility to provide accommodation during economic downturns. Finally, the revised consensus statement retained our commitment to conduct a public review roughly every 5 years. There's nothing magic about the 5-year pace. That frequency allows policymakers to reassess structural features of the economy and to engage with the public, practitioners, and academics on the performance of our framework. It is also consistent with several global peers.
Morpho's killing it right now.
To wrap up, I want to thank President Schmidt and all of his great Kansas City staff who work so diligently to host this outstanding event annually. Counting a couple of virtual appearances during the pandemic, this is the 8th time I've had the honor to speak from this podium. Each year, this symposium offers the opportunity for Fed leaders to hear ideas from leading economic thinkers and focus on the challenges we face. The Kansas City Fed was very wise to lure Chair Volcker here to this national park more than 40 years ago, and I am so proud to be part of that tradition. Thank you very much.
Wow.
That was Fed Chair Jerome Powell wrapping up his annual Jackson Hole remarks. What a Jackson Hole speech that was.
Insanely bullish. Insanely bullish, guys. Let's go on over and look at some of these charts, because we are pumping very hard right now, especially with the coins that we hold on this channel, the likes of Morpho, which is the second biggest gainer in the entire market, up over 30% in the last 7 days and up over 8% in the last hour. Ethereum has a clear breakout. Look at Ethereum on the 4-hour. We drew this line. I showed you guys before the speech started. I said Ethereum's looking good. I showed you the line, and we got a mega breakout during the speech. And that's kind of what I expected, to be honest with you, for altcoins. Bitcoin, it was kind of choppy, you know, but altcoins looked ready to send it. And that's exactly what I said to everyone in the Discord this morning in the voice chat we had. I came into the voice chat and I said, the market's already priced in a hawkish speech. The market's already priced in Powell coming out, talking about inflation, going on about PPI rather, complaining about the PPI result. The market already priced that in. So if he just slightly hinted at a cut, which he did, by the way, not slightly, he basically said they're going to cut, okay? If he did that, we would mega send. So my analysis on this was perfect, right? So we're getting the cut by the looks of it. We have an 88% chance now of a rate cut in September. 88% chance. That's what the market is now pricing in. And now we're about to go risk on. We're about to go risk on. This whole thesis of risk on into the rate cut is going to be proven true. We had a little blip in it. We had a little blip, a little sell-off. It's normal, right? In a bull market, you have sell-offs. In an alt season, you have sell-offs. Don't believe these BS YouTubers who tell you we go up only with no sell-offs, banana zone and all that bull crap. Don't believe those guys. You have sell-offs in a bull market. Okay? And that's exactly what that was. And now we're back into the bull market. We're back into pump time. And I believe the same thing that I've been saying on the channel for weeks now. I believe markets are going to go risk on into the September rate cut. We're now going to be pricing in rate cuts, okay, based off that speech. 91% chance on CME of a rate cut. According to Polymarket, we have about an 87% chance. So it's between 87 and 91% chance now that they cut in September. And had you been a subscriber, had you had notifications on this channel, you would have watched the video I made called Watch Within 24 Hours. I hope you watched it. And I basically said everything is flashing. Let me just get the screen on here. Can you guys see the screen or not? I basically said everything is flashing for Powell to come out and just deliver a speech, and then the market pumps. Because we had 5 consecutive red opens or 4 consecutive closes on the stock market. Red. 4 consecutive days red. So the market priced in a negative speech, and it also priced in rate cut odds being around 50-50. That's what the market was pricing in, was around a 50-50 chance, toss of a coin, of a rate cut in September. So I said, look, the market already expects Powell to come out and basically go on about inflation. If he hints at labor market weakness, potential labor market weakness, which he did, we will send it. And he hinted at labor market weakness. And I said, look at all the charts. Bitcoin is at support. RSIs are super low. We look ready to pump. All right. And, hopefully you watched that video and you watched my live stream yesterday, because you wouldn't be freaking out. You wouldn't be bearish. You wouldn't be selling. You wouldn't be one of those people who are sidelined thinking it's all over. And, another thing, I posted a tweet out saying, when everyone gets bearish, when everyone's doubting altcoins, that is the time to buy. Because that's usually the peak fear. That's usually the point where you reach peak fear, is when everyone doubts it. When people start attacking me, I buy coins. Because I know people are getting frustrated. They're getting impatient. Right? Because my track record is very good. But when people start doubting me, they start saying, Archie, are you really going to make money in the next few weeks? Is this really going to plan? When people start doubting me, I start buying. Because every single time people do that, it's always a local bottom. Every single time they do it. And look at that candle there on Bitcoin. I mean, absolutely amazing. Amazing, amazing rally. We're making a ton of money right now. Let's take a look at a few of the alts, because look at that sea of green right now. Let's see what's humping the most. Morpho, second biggest gainer on the entire week, up 32%, up 5.9% in the last hour, and up just under 10% today. Aerodrome starting to move up now as well. Arrow is up 8.7% in the last hour. Crazy pumps going on. And let's check Casper, because I'm getting ready to long Casper soon, guys. If Casper gets above 10 cents, I'm going to long it. I'm going to long Casper if it gets above 10 cents, because you've got this like massive resistance line that it basically always hits. Since basically its all-time high, this massive resistance line, Casper always rejects. So if Casper closes a week above this line, I'm going to long it. And if you want to follow along, first of all, you can join the VIP because I'll share the trade when I do it. And second of all, get Blowfin. Okay, the link's down below. It's pinned in the comment section. Sign up, get your free bonus, and you want to start getting ready, you know, especially for the bear market, because I make a ton of money on the way down in crypto. When things go down, I short them and make a lot of money. And you don't want to miss out on those opportunities. You don't want to be one of these guys who's just basically a lame duck sat there not making any money on the way down. You want to make money on the way down. You want to thrive on the way down. And that's exactly what we'll be doing. So, yeah, great speech overall. And we got a nice breakout here on Ethereum from this downward slope and resistance. Aerodrome now up 14% on the day, up 14% on Aerodrome, killing it. Killing it. Almost a new high on this move for Arrow. Almost a new high on this move. Some of these alts are moving up pretty big here, guys. So what about Total 3? How's Total 3 looking? Right, nice green candle on the 4 hour. Let's pull up the weekly here, see what's going on. So the weekly on Total 3 is still just below resistance. If we break above this all-time high, which we double topped at, I'm expecting 1.47 trillion on Total 3. Yeah. You're late to the party. Powell said cuts. Powell basically said he's going to cut. I mean, he basically said he would. Yeah. For 21, this dude is mega bright. Thank you. I appreciate that. I've been in crypto a long time, despite my age being very younger. I've been in crypto since I was 14, 15, 14, I think. So it's been many years. It's been way over 5 years of crypto. Appreciate it. Alts going mental? Absolutely. So there's some key things to look at in the coming weeks, guys. We got the Total 3 chart. We need that to break its all-time high. Ethereum is the big one, right? Ethereum's the big one. It looks like it's trying to get above trying to get to its all-time high now. Let's get the exact percentage away from all-time highs Ethereum is. So Ethereum is 6% away from its all-time high. So we probably will hit that before the FOMC, most likely. Most likely will far exceed it before the FOMC. I think Ethereum could actually be sitting close to 6K. Close to 6K by the time we get the rate cut in September. But we have got new data coming out in the meantime, so we've got to take it level by level. We don't want to get too ahead of ourselves, right? We have data coming out, which could potentially change the direction of where we head. But more likely than not, we are going to get a cut in September, and markets are going to front run that now, and we are going to pump. Apparently, there's a god candle on Heroes of Mavia. Let's take a quick look. Let's take a quick look on the daily. Yeah, starting to pump up. Mavia is a great buy right now. No brainer buy, especially with Ethereum pumping. If gaming come back, Mavia is going to send it. Yeah, Bitcoin dominance falling off a cliff. Absolutely falling off a cliff. And I called that. I called it perfectly. At 66%, I said that was the top for Bitcoin dominance. While all the other YouTubers were saying we're going to go into the 70s. We're not going to have an altcoin run. We're not going to have an Ethereum run. All that BS. I was saying dominance is ready to fall off a cliff. Look at dominance now. Look at what it's doing. It's falling off a cliff. The next target's 56%. I stand by that. And then after that, we start looking at 52% and then maybe even 47% if we go there. But all of these things, the VIPs already knew because I prep them every day. We go into voice chats, you know, and I'm prepping these guys every day on all of this. So everyone's already familiar with what's going on. And when we see it, they're just like, oh yeah, Archie said that on the call. We were in the voice chat earlier with the members. They're just like, yeah, I already knew that was going to happen because we spoke about it this morning. We spoke this morning about the fact that it was already priced in to be bearish and to be hawkish. And if it was slightly different, the market would front run rate cuts and go crazy. So everyone's made up right now in the VIP group. Powell definitely longed before this. Yeah, imagine. Yeah, Mavia's starting to take off, which is great. ETH 10% in an hour. USDUC going mental. Yeah, that was my recent meme coin alert. Let's see how it's doing actually. USDUC, the next global reserve currency, as they say. Imagine the unstable coin becomes the real coin that everyone wants. USDUC. Wow. Pumping crazy. Wow. Man, the VIPs are printing really hard on this one right now. Crazy. Up 14% in an hour. Crazy. Yeah, Toshi looks good. $5 donation by Billa. Appreciate it. Where can Casper go if it gets to tier ones during the parabolic phase? I mean, it's a big if, right? We haven't seen any tier ones yet. But if it does happen, then I think Casper could potentially go to 70 cents this bull run. Maybe $1 on a wick. But Casper's chart has been in a downtrend now for so long that, like, time is running out. You know, time isn't on our side. So I think, personally, if it hits 30 cents, I'll be happy with that. I'll be up 10x from my entry. You can never complain with a 10x. Printing too much. Yeah, VIP is making a ton of money right now. Zora's up. Yep, Zora's a solid one. How do you join VIP? It's linked in the description. It's linked in the description. Let me just post it in the chat for you. Yeah, use the code as well at checkout, guys. Use the code ETH. That's ETH at checkout. You're going to actually save yourself 25% off. I'm going to be getting rid of this. Once Ethereum like breaks its all-time high, I'm going to be getting rid of it. So make sure to use that promo code at checkout if you are thinking about joining the community, if you're wanting to track my trades. And if you're new to the channel, appreciate you tuning in. Drop a sub. Little bit of background around me. I'm 21. I become a millionaire from crypto at 18, and I've been in crypto since I was 14. So I know a thing or two about crypto, and my track record does speak for itself. But yeah, Casper, waiting for it to break above that downward sloping resistance line before I enter a significant position. Yeah, Bitcoin dominance falling off a cliff, Ethereum 4.6K, Bitcoin almost 116. Be interesting to see if Bitcoin can get back above this trend line here that it fell down below. Need to ideally get above like 117. Join for new buy alerts. Yeah, there'll be some new buy alerts for sure. Altcoin pumping. How high can it go? Let's check Altcoin. By the way, Blowfin's the best exchange for trading. Has all the pairs. I was doing a deep dive into a ton of different exchanges. I've had all the exchanges contact me. I've had Mexi. I've had loads of them, right? I was doing a deep dive, and Cryptex, my analyst as well, said Blowfin is good. So I just came to the assumption this is the best exchange for various reasons. It's non-KYC as well. Fartcoin's not pumping that much, but it's having a nice move for sure. I think Fartcoin could do a 5x maybe from here. Maybe a bit more. Well, Troll is pumping, right? Are we up more than 20x on Troll again? Wow. Troll's basically at 2.6 now. Crazy. How much are we up on Troll? 2.6 divided by 0.012. $21x. So we're up 21x on Troll from the lowest position. From my recent buy alert, you'd be up 21x on your money on Troll. Cannot complain with those types of gains. And the VIPs got that first. We're up 22x now on Troll. See, this is the thing. When you've got such a good entry, a little 1% move just adds another X to the amount of money you're up on it. Because you got such a good entry, you're up so much. Just a 1% move, 2% move, 3% move. It's altering the amount of X's you're up. So Troll is pumping, USDUC is pumping. That's my new meme coin. Maybe it's the next Troll. We'll have to wait and see. ETH 4.6K, Solana 190. Solana is quite undervalued right now, actually. I was looking at Sol BTC. It looks very cheap. It looks very cheap on the behalf of Sol. I mean, look at this. This is Sol to Bitcoin. So instead of looking at the Solana and USD valuation, you're looking at Solana and Bitcoin. Solana's breaking above the golden pocket here. And I actually sent out a post saying in advance that I expect Solana to bounce on its Bitcoin pair. So right now, Benjamin Cowen's whole thesis of altcoins, you know, lagging to Bitcoin, it's going out the window. It's going out the window. They're pumping to Bitcoin, and they're pumping big time to Bitcoin. And they have been now for weeks. So there's a lot of influencers right now in denial, actually, about alt season, telling their followers, we're not in an alt season. It's not going to come. Not going to come anytime soon. Whilst dominance week after week is red. It's got to be in the right coins. And we are in the right coins. Aerodromes, the Morphos, those types of coins, they're doing great. Smash up the likes. Absolutely. Let's get those likes up on the stream, guys. If you're enjoying the stream, please do hit the likes. How many X's do you think Mavia can do? It could do a 50X, but I don't think that's like the base case, right? Maybe 10x, maybe 20x, maybe 30x. Big day for crypto. Yeah, it's been great. Loaded up heavy on Say. Good stuff, man. Say, let's pull up the Say chart. So Say is close to a long. Not quite yet, but it's close. Just like Casper, it was still in a downtrend. Say is still technically in a macro downtrend. It needs to break above that level to facilitate an uptrend. But anyway, guys, we're going to wrap up the stream here. I appreciate you all tuning in. Make sure to check out the VIP group if you want to access the Discord group that never ever sleeps. We'll be in a voice chat in there later today talking about the markets and the ramifications of Powell's speech and where we think the top will be. We'll be discussing exit strategy. We'll be discussing potential tops, all of that stuff. So sign up to the group. Use the code ETH at checkout. That also applies to the bundle, lifetime, and the yearly option, as well as the mentor tier at checkout. Get yourselves in there if you want to have an edge in this market. It's linked in the description. Just put a link in the chat there as well. I'll give you a massive edge against the rest of the crowd. And sign up to Blowfin using the link down below. Claim your free bonus. And get trading. So appreciate you all being here today.